So here we go. This guy right here, Tiff Macklem, cut interest rates by 50 basis points. Fully expected. Okay, there's nothing new there. They cut interest rate by 50 basis points. Woohoo, the world is winning. Canada, great, fantastic. Lower mortgage rates, lower rates. That's fantastic for the economy and for everyone. Maybe. Maybe not. The 50 basis points was fully expected. Okay, first of all, I did a video on this. Just check the previous video. Talked about how I've been talking about this for a very long time, and I'm getting tired of talking about it. But the unemployment rate is getting alarmingly higher at 6.8%. Now, the 50 basis point rate cut that came in, being fully expected, before that happened and before we got the jobs number a couple months back, we were thinking about that December would be not a 50 basis point rate cut. Maybe we would start the 25 basis point cut. But he didn't do that, and it does, make you wonder, why did he go with the 50 basis point cut? What's there to worry about when you're cutting rates that aggressively? And obviously, like I've been pointing out, that unemployment rate is moving up higher, and it's very close to the 7% level, and most likely it's going to continue on its trend of moving much, 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 much higher, especially with a lot of risks for 2025. Now, when we got the 50 basis point rate cut being fully expected, how did the bond yields? Okay. Now, first of all, you might get the interest rate cut, the policy rate cut. But when you look at the Canadian bond yields, the 5-year, right, the 10-year, the 30-year, the expectation is that you would see those yields also come down. Generally, it tends to influence those yields to come down if you're cutting interest rates, right? But that didn't happen today. So, although you might think that's a win, although you might see on TikTok and YouTube and Instagram Reels or whatever social network you're on, you might see a bunch of realtors or mortgage agents coming out that, okay, Bank of Canada cut interest rates, buy, let's go, lineups at these pre-construction condos here, line up at these pre-construction houses there, buy. People are lining up like crazy. They've got money. Interest rates are going down. Real estate to the moon. Chase. But have you gone on Realtor.ca? Have you gone on House Sigma? Have you checked the inventory? That's been going up higher and higher and higher. Isn't that odd though? Hold on a second here. Interest rates are going down. Realtors are telling me that prices are going to go up, but the inventory and the number of sales that are coming up on the Realtor.ca page is going up. There's properties around my neighborhood that have had listings for more than a year or two. We started the rate cut long back. I mean, shouldn't those houses be sold by now? And still, there's crickets? Interesting. Does it take a genius to figure out what's going on here? Does it really take a genius to figure out what's going on here? Those rate cuts don't mean anything if you've got a very weak economy. Now, it's not weak just yet. You might argue the other components of the data is okay, but weakness in terms of when I'm talking about the unemployment rate, the signs, the signals, people sitting on the sidelines, right? We heard, maybe you heard, I've heard multiple times from many realtors, oh, people always sit on the sidelines. So annoying. Go out and buy your house. Annoyed, sitting on the sidelines. What are you scared about? Prices are going to be higher. Buy, buy, buy. Real estate never fails. You never lose money on real estate. You can believe what you want, but like I've been saying, and like you've been also seeing with the data, that doesn't seem to be true, that we are going higher. In other words, we are seeing that the real estate market has peaked. Prices have peaked. Prices are not moving up anytime soon, regardless of the rate cuts, unless you have a Goldilocks economy, unless we don't get that recession, unless things just pick up all of a sudden, then fine, sure. You won the argument. You were right. Sure, 20 years down the road, real estate prices will be higher. But not right now where we are in the current economy. There are ugly signs showing up slowly, and you will see them in about a year to 2 years' time, however long it takes. And we're already seeing it from the unemployment rate. It's just a simple indicator that makes you worry of what's going on. Now, going back to what I was saying before, I got a little bit sidetracked there with the realtors and the TikToks and all of that. It always does that to me. It's just very interesting when you see these TikTok videos and whatnot. But anyways, the bond yields have ticked up though, right? So the interest rates have come down. You would think that, okay, the mortgage rates would come down, but then when you look at the bond yields that do influence your mortgage rates, those have gone up today. Now why? Okay, first of all, you have traders trading these bond instruments, right? And it's fully priced in that they were expected to basically cut 50 basis points, right? 50 basis points. And it's been selling off, if I look back, since November. Okay, so it's fully priced in. There's no reason for it to go lower. That's one thing. Number two, couple of comments that came out from TIFF, right? Talking about 2025, talking about uncertainty around tariffs, right? Seeing how Trudeau's handling the situation with Trump, and Trump hasn't even, stepped in office yet. So he is showing some signs of uncertainty, and that could cause the stop or the pause of the rate cuts. Because if you get those tariffs, one, be very bad for the Canadian economy, especially where it is right now. And number two, it could reignite inflation again, especially if you got a weaker currency, right, from those tariffs. So you could get a pause and then, rate cuts coming back in again. We'll have to wait and see. But let's go over a couple of things Tiff Macklem has said and point out things that you should know. So first of all, a couple of things from the press conference. He said that we cut 50 basis points for two reasons. Number one, we no longer need a policy that's clearly in restrictive territory. And number two, the data tilts towards a softer economic outlook for GDP growth compared to October estimates. So acknowledging that the economy is getting weaker. There you go, right? There's some mixed signals in the economic data. That's how it is with the economic data. It's lagging, it's slow. It will eventually show its real teeth later on. Cites lower immigration targets as a reason to suspect lower growth, right? Immigration's being affected here. And he also pointed towards the unemployment rate. I think there was a question that the unemployment rate is a little bit higher, and doesn't that worry you? And he talks about how, it's really being driven by the youth side, because there's a high unemployment rate from the youth. That's what's driving the level higher, and basically shrugging it off. But that's not to be shrugged off. and talks about how, the immigration, a lot of youth coming in, and that's also ticking up the unemployment rate higher. We can't run policy on something that might happen. We are in excess supply. The economy has been soft, again pointing toward weak economy. The threat of tariffs on Canada is a major source of uncertainty, but we don't know if they will be implemented. So definitely thinking about the impact of tariffs. Definitely you can expect that growth would be heavily impacted by that. We haven't seen widespread job losses like you would typically see in a recession. More of the weakness in the Canadian dollar is appreciation in the US dollar, and we could expect, especially if you get a recession, guess what? The Canadian dollar is going to go lower. The US dollar is going to move higher on that. You're going to get a weaker Canadian dollar for sure. We will have to factor in Canadian dollar weakness into forecasts. We will have keep an eye on how immigration and rate cuts compete in the housing market. We are not expecting a recession. That's a lie. You're expecting a recession, okay? Whenever you get a massive move like in the unemployment rate, moving up more than 1-2%, definitely history has always led to that big kaboom moment where the unemployment rate skyrockets. You get the recession, okay? It's coming. You look at the data, you look at the history, and then you will see. Asked about ongoing cuts, cites 175 basis points in cuts. That's a lot. Could be a signal that they're ready to slow down and pause and wait for this tariff kind of situation, maybe go towards moving towards 25 basis point rate cuts. Cuts will be working their way through the economy. Going forward, I expect we will be considering further cuts to rates. Obviously, they're not done with the rate cut cycle. It will go further. It will cut further. There will be emergency rate cuts. It will, I believe, get back to the zero bound area. All right, and I'm laughing because I can already hear it on TikTok from all these realtors. Oh, interest rates are back to zero. Buy, 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 buy. Sure, there's a time to buy. I'm not saying there isn't a time to buy, right? But by the time that happens, okay, the economy is going to be in a very different state and situation. We're going to see a recession. We're going to see, the job market crumble. People are going to be hurting. All right, so I'll leave it at that. If economy evolves as anticipated, we'll be making more gradual approach. It will be more gradual than 50 basis points. We cut at the last two meetings. So again, reason for those bond yields to move up higher, while he did a 50 basis point rate cut already. The reason for that is because the more gradual approach. Okay, that is seen to be more hawkish, which is why bond yields went up. Thus, that influences those mortgage yields to go slightly higher as even though he's doing rate cuts. I know that's kind of crazy to think about, but yes, that's true. In fact, had a mortgage agent mention to me that the fixed rates from the bank before this meeting have gone up. Okay, so definitely, the banks also see, there could be more slower rate cuts in 2025, and definitely there's more risks in 2025 with the tariffs and so on, especially with the bond yields slightly moving up higher here. That doesn't really change much in providing massive easing as people online are talking about. We will be considering further reductions, but we will take them one meeting at a time. Again, hawkish, slowing down the rates. There's clearly some slack in the labor market. Okay, so there's a 50% chance the market is pricing in of a cut, but only 61 basis points in all of 2025. So 56% chance of a rate cut in January. That's what the market's pricing in, and total rate cuts in 2025 is expected to be 61 basis points. So you can see the market is picking up the signal from Bank of Canada that we're slowing down. There's risks, tariffs, etc. Although this can all change in the span of next 3 to 4, 5, 6 months, definitely. But that signal there of the 50 basis point rate cut, bond yields going up, and the Bank of Canada telling you we're slowing down, etc., etc., is all signals to tell you that, one, they're concerned about the future. One, that don't expect these massive rate cuts, and another is that those mortgage yields and rates are not going to come down aggressively, and they're not going to prop and help the markets until there is something drastic. Until there's something drastic, they will go back to those aggressive rate cuts. So this whole meeting was fully expected. Even the hawkishness, even the fact that he's saying that he's going to slow down, gradual approach and whatnot, expected. The takeaway from all of this is that he's concerned about the future, concerned about the growth, especially in Canada, concerned about the slack in the labor market, concerned about the weakness and how the unemployment rate is going up. Obviously, he didn't say this explicitly, but you can grab this from what you're reading here and from seeing from the data. What's next? Next is just an event. That's what comes next. Simple as that. Whether it comes in 2025, 2026, 2027 is yet to be seen, but that's what simply comes next. The signs are there. It's very obvious, and time will tell. So anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified next video, and I'll see you guys around. Cheers. Bye.